that's the controversial bit of the thesis. The thesis starts with, it's all about education. And in itself, if you've educated men and women boys and girls up to a decent level, even of just basic literacy in any language, inevitably, actually, the fertility rate does decline a generation or 2 generations later. So education always comes first and development comes later. What I think's been missed in the development thinking and theorizing over the last, forever, actually, is interest rates. So I come from a investment banking background, and in investment banking, you're pricing shares or you're pricing bonds, and it's all about the interest rates, all about the return on money. Development economics, as I see it, is primarily what's the most effective way of giving away money to support growth. Very valuable work, not the work I've done, but super valuable. But they don't think, because they're giving away money, that's not about what's the return on my capital, how much profit can I make from this, what sort of interest rate are we playing with here? So when I started to look at development in Africa, which I did from an emerging market perspective, on the assumption that Africa was the last frontier market, this is the one that capital was eventually going to come to, and that's how I was getting paid to do this work. What struck me was how incredibly high interest rates are across Africa. And that I heard so many explanations for. It was greedy banks. Greedy banks pay you little on deposit. They end up paying really double-digit high interest rates when you get a loan from them. They're ripping you off. It's foreign investors. Foreign capital doesn't understand Africa. They price the risk wrong, and that's why they charge Africa such high interest rates. This isn't just Africa, by the way. This is Pakistan at the moment as well, Afghanistan, if you wanted to invest there. Anyway, the multitude of reasons. It's foreign companies. They come in and asset strip a country. They take out the gold. They don't leave the profits back for the people of the local area, and that's why there's not enough money in the country. And this is why Africa's poor. And of course, not all of Africa. We're going to caveat this right through the conversation, but anyway, it's we'll go. So all of those reasons are partly true. By the way, there is an element of each of truth in all of that. But the biggest driver seems to be how big your bank deposits are in your economy. If you've got umpteen amounts of bank deposits in your economy, then your interest rates are very low. And that does happen in Africa. You see it in Mauritius, Morocco. Interest rates are, is it 1.75% now? 1.75. It's just like a third of what the UK or the US is. It's incredibly low. Why are Moroccan interest rates so low? And I went to see the Moroccan chief economist of the central bank. I said, where are all these savings from? You've got 100% of GDP in savings. That's a huge amount of money. If I take another example, many Francophone countries in the West African region are more like 20%. So why is Morocco at 100%? And he said, it's because we stole all this money from Spain. 1492, they threw us out and we took it with us. Now, it turns out it's not as romantic a story as that. It's the fertility rate in Morocco went down below 3 kids in 1999. And when that happened, Moroccan families could save money. And you see this globally. And it's happened in every country in the world since 1750 and 1800 and the industrialization of Europe. It's all been about a falling fertility rate. So I will finish this very long answer, but to simplify it the most, if you've got 5 or 6 kids on a Friday night, you've got no money left. If you've got 2 to 3 kids on a Friday night, you have got money left. And if you do, you put a shilling, a naira, a few West African francs into the bank account, and the bank deposits start to grow. And as the bank deposits grow, interest rates come down, and then countries take off.
So essentially, you had a look and you said, okay, development in Africa is not happening because they have high interest rates. They're not able to get loans. And after some digging, you've realized that interest rate is linked to savings of the country. And then you dug a little further and found that has a relation to fertility. But I was wondering, is it kind of how do you know the cause or causation? Like, is it like, for example, education goes up, so fertility goes down? Or how do you know, okay, if we reduce fertility, then that's going to go up? Like, how do you know which one causes the other?
Because we've never seen it the other way around. So there's no high fertility country that's got rich, ever. And every country that is rich is low fertility.
Mm.
There is no country in the planet where bank deposits are where a fertility rate, say, above 4 kids per woman. I usually talk about 3, that's the key metric. But at 4 kids, there's not a single country in the world where bank deposits are more than 40% of GDP.
Mm.
You need it to be, well, at least 50, but ideally 100% of GDP. If you're under 40, and in fact, I mean, I've done the numbers. I've taken bank deposits for every country in the world, and I've looked at it over time. And if you've got 5 or 6 kids, your bank deposits are 20% of GDP. Now, the government debt in these countries is usually about 40% of GDP, 50. So they're basically borrowing everything the banks have got. And that means there's nothing left over for the private sector. There's nothing left over to create jobs. There's nothing left over, in fact, to fund infrastructure, electricity, roads, ports, everything we need to industrialize and take off. So it's always been fertility rates fall first. And there is one annoying exception, which is the United States. But what was interesting about the United States is they had this constant wave of highly educated immigrants, relatively highly educated. They were relatively well-educated Europeans floating into America, and then helping that country develop, despite it actually having a fairly high fertility rate. But it also had unlimited natural resources. It had an awful lot of advantages, America. If we take out that little exception, rather important exception, it's always been the other way around. You've got to get the fertility rate down first. And we've seen it just happen again and again, decade after decade in Asia. Who took off first in Asia? Japan. Fertility rate was down, followed by Korea, Taiwan, Singapore, Hong Kong. In the 1970s and 80s, fertility rates dropped below 3. But why not? Why not the Philippines? Why not Indonesia? Why not India? Because they hadn't got the fertility rates down yet.
I guess that's why it's so interesting, is because everyone thinks you develop first and then the fertility rate comes down. But your work highlights that actually it's a prerequisite. The fertility rates have to come down and then you can develop. But so we were talking about your ideas earlier, and we were saying, well, why is it controversial? Well, it's not you've backed it by data, and you're not plucking this out of thin air, are you? But it still causes such a kerfuffle when you tell people about this.
The link between this falling fertility rate and development was actually written up in the 1950s by one of the very first development economists. He was talking about India, and he was spot on. He said India's just not going to develop for generations because the fertility rate's too high. He was right. So in that regard, it's not that controversial. I'm adding in the interest rate part of the equation, which, to be fair, he probably didn't have the data for. Why is it controversial? Because I had a debate in Rwanda with the chief economist of the central bank there, very smart guy. And he just said, look, Charlie, what you're forgetting is you're a farmer. And a farmer sees value in the more hands on the farm he's got, the richer he is. Because the more cows he can manage, the more crops he can collect. So the more children you have, the more hands you've got, the richer you are. And that's worked for thousands of years. And what technology and industrialization has changed. And in fact, the fact that your kids live. The other day, you go back and anyway, we'll get back to that in another point. But the point is now that if you just want your kids to be uneducated, rural, illiterate farmers, then yes, and if there's unlimited land, as there was in America, of course, but less so in Africa now because of population growth, then as a farmer, you have always wanted lots of kids. But now we've gone into a world where to get a job in an office on 5 times the wage you'd get as a rural subsistence farmer, you need some education. And that requires an investment. So you have to change the mindset of families where the grandfather, at least, possibly the dad and the mum are saying, no, have more children. This is a sign of your success and your wealth.